So we have for capital allocators who want to start a fund, we help them with literally all aspects of it, apart from the platform, the technology, the legal, and the compliance. We give them marketing packages where they can find deals. We give them education, and we also help them find deals. They don't have to go only through the deals which we provide. They can get their own deals as well. So.
Hi there, Adam Gower here, founder of GowerCrowd.com and host of this brand new podcast series where we're going to be focusing on the world of the capital allocator and fund of fund manager. And my guest today is Badri Malynur, who is co-founder and vice president of sales of Avestor. Now, not just as the co-founder and vice president of Avestor, but he is also at the absolute epicenter of everything that's going on in the fund of fund world, in the capital allocator world. Avestor is an incredible platform. I've been working with what I call back-end platforms, the platforms that our clients, sponsors, use to accept investments and sign documents. It's the point at which investors actually make the decision to make their investment. And those platforms really just process documents, for want of a better way of describing it. Process documents, some landing pages, relatively minimal. What Avestor does is leagues separate from that, or leagues above that, in terms of the layers of support that they offer, both to investors and to sponsors. You're going to be learning all about that today in the podcast. If you've not already signed up to my newsletter, please go to GowerCrowd.com, hit the subscribe button on that page. It is a free newsletter. It comes out every week, and we offer all kinds of guidance and tips on how to raise capital, as well as best practices for investing in commercial real estate syndications. All right, so without further ado, it's my great pleasure to turn things over to Badri Malynur. Here he is, Vice President, co-founder of Avestor. Badri, what a pleasure to see you again. Thank you so much for joining me on the podcast today. Brand new series.
Wow. The pleasure is all mine, Adam.
You have pole position in my new season of podcasts here. So thank you for joining me. Well, let's start at the very, very top, high level. We're going to dive into this a little bit more. But high level, what, for somebody who doesn't know, what is Avestor? And by the way, am I pronouncing that right? Right. I hear people pronouncing it differently. How do you pronounce it?
Avestor. I have to plead guilty to it until our marketing department corrected us. We used to sometimes use Avestor and Avestor, but the proper way is Avestor, is what we would recommend. But hey, if you're a client of ours, we'll let you pronounce it however you want.
All right. So what is Avestor? Just very high level, and we're going to dive deep into what it is. But high level, what
Absolutely. Avestor is a platform that helps you create funds for alternative investments. It could be a wide range of investments. It's more than just a platform. We give you all kinds of utilities and services so that we truly become a business partner. But I'll keep it short. That's the 30-second pitch, and then I'll go into more details as we go along. So.
All right, good. And it's not just real estate, Badri, is that right?
Absolutely. Absolutely. So let me go into the next layer of detail here. So we have a wide range of funds. Majority are real estate, but we have a lot of other type of funds. You can use this platform to create a fund for raising money for startups. It could be an alternative. It could be, you think of it as like a customizable venture fund. We'll talk about what customizable funds are in a second. There are people who have used this for raising money for tax liens, for basically oil and gas and all kinds of real estate, of course, multifamily, self-storage, retail, hospitality, student housing. Mm-hmm. So really and people have used this for raising money for investing in a Forex fund. So you could also invest in publicly traded entities, except that there is no mark-to-market valuation. But to keep it short, It can be almost any type of alternative investment or even a public investment which does not require a mark-to-market valuation every day. So,
Okay, so let me understand this, and I'm going to quote, forgive me for doing this, but just so that I can have a contextualize what Avestor
sure.
is, so that the audience can as well. When I think of Avestor, the first thing I think of is a kind of back-end investor management system that accepts investments and allows sponsors to manage those, to deliver documents and take people through the entire investment process. But you're a lot more than that, aren't you?
Exactly, exactly. So there are two main things which distinguish us from all the investment management portals out there. So what you described is a typical investor management portal, which is very important to the investor experience. Don't get me wrong. But the investor management portal is only a piece of what we offer.
Mm.
So there are two things which really distinguish us from all the other companies out there. One is we don't create any type of fund. We create something called a customizable fund, which allows investors to pick and choose which deal they want. Think of it like a stock brokerage type of experience to alternative investing. It's like you going to Fidelity and say, hey, I like the Magellan fund, but I don't like this 35 stocks. Can I take this other 65 stocks? And obviously, you can't do that. But here you can pick and choose deals. So, one is the customizable fund. And then the second thing which distinguishes us is we are not just a platform provider. We help you with all aspects of legal compliance. We do your fund accounting for you. We have discounted tax partners, discounted marketing partners. We give you an attorney who will file your fund documents for you. And we have a mastermind where you interact with fund managers. And we have a ton of educational content which tell you how you can become an effective fund manager. So let me recap that. Two things, two important things.
Mm.
One, we are the premier provider of customizable funds, and we introduce the concept of customizable funds. And two, we are not just a technology portal. We give you all the other services and become a true back-end business partner to help market, launch, and scale your fund. A
Yeah,
little long-winded answer, but
no, please go as long as you want. It is absolutely fascinating what you want. As you know, we work with sponsors and have done for a long time, and the back end systems that we're used to are nothing more really than document transmission systems. I mean, for want of a better term, kind of secure environment. So help listeners understand from an investor perspective, because this is a really major distinction. This is just what you were talking about. But from an investor perspective, so somebody who's not a sponsor, not a fund manager, but somebody who comes to Avestor, what is their experience? What do they see on the platform?
that's a great question. So really, the idea here is to replicate the stock brokerage type of experience. So let me kind of digress a little bit. What do you do when you open a stock brokerage account? You go through the process, you put a certain amount of money. You're not really sure which stock you would buy. If you're like most people, you don't know every single stock you're going to buy in the next 6 months, or let alone, I mean, maybe not even in the next week, right? So that's the same experience we want to give, where investors come in. A customizable fund has been created by one of our hundreds of fund managers, and they come in, they sign the PPM, they open an account, and then we have ACH capability where they deposit the money, and then they log into the portal and they can see which deal the current fund manager has. It could be real estate, it could be startups, it could be I mean, a variety of other type of investments. And they can decide how much they want to put in each of these deals without having to sign a 40, 50 page PPM each time. So that's part number one. Part number two is once they've finished the investments at the end of the year, instead of getting a separate K1 for each one of their investments, they get a single consolidated K1. And all our investors really love that. And part number three is we have something called a virtual cash balance. A lot of your sponsors are familiar with the syndication model, where if distributions come in, they immediately go to the investor's bank account. But in our customizable fund, we have a virtual cash balance where if distributions go into the virtual cash balance, just like dividends from a stock market account go into the cash balance, and we are partnered with a fintech startup which is offering a 4% interest right now. So those are the three key things. Stock brokerage type of experience where you create an account and then you decide how much you want to invest in each deal, single K1 and virtual cash balance. These are some of the key things which distinguish our investor experience.
So is it
So
like a marketplace then? Is that what you're describing,
it
Badri?
is not a public marketplace. It is a marketplace where they come in and see the funds or the deals which the fund manager is exposing for you. So,
Okay.
what is the job of the fund manager? He's almost like he's screening the deals. If you're looking at hundreds of deals, then the fund manager has not done his job, right? Or her job. So, it could be deals from the fund manager itself, where the fund manager is the active sponsor, or it could be deals where the fund manager is more of a capital allocator,
Hmm.
where he has screened deals from top tier sponsors in variety of asset classes, and he exposes his investors to those deals, and then the investor gets to pick and choose and see what deal they want. So
So how does it? It was one thing you said that's very interesting. You said you don't have to sign multiple sets of offering documents. So that's kind of interesting. So you've got oil and gas, you've got all these different alternatives in on a screen, presumably that investors can choose from. So how does it work that they only sign one PPM? Aren't those offering docs different for every single offering?
great question. Great question. So what we do is when a fund manager creates a fund on our platform, the very first thing we do is we get on a strategy call and we ask him to identify or her to identify all the different asset classes they're likely to go after. It doesn't mean that they will have to in the next year or two. And then we have, with over having worked with a dozen SEC attorneys, we have a template PPM document which outlines all the risks for those asset classes. Now, it could be multifamily, it could be self storage, and maybe they do a little bit of startups. So we'll identify the generic risks for all those asset classes. And then for each of these deals, we have something called a deal disclosure document, which is a 10 to 12 page template, which outlines the risks for that particular deal. Each deal will, of course, have its own terms. And so the terms for that particular deal, any conflicts of interest. And so the investors do sign a much smaller document, which is much more focused towards a deal when they invest in a particular deal. So the sequence is when they sign up, they say, hey, here is the general PPM. We invest in multifamily, we invest in self storage, we invest in startups. I'm just giving some examples. And they identify and they acknowledge the risks associated with these asset classes. And when they are ready to invest in a particular deal, let's say they're putting $10,000 or $20,000 in a deal, then they sign the deal disclosure document, which is something proprietary which we have developed over several years now. So.
Absolutely fascinating. So typically with, again, I'm just going to use the term back-end systems, forgive me for that, which is kind of the generic type of system that people are used to. With those platforms, sponsors generally show up. They've already got a fund, or they've got some kind of structure that, they have is their own unique set of offering documents. What is the experience for a sponsor coming
That's a
to?
great question. Let's switch gears a little bit. So far, we have been talking about the investor experience.
Right.
Let's step back and we had talked about the different type of asset classes. So let's talk about who are the types of people the Avestor platform would be a fit for. Yeah. There are four broad categories of people who we believe are great target market customers for us. One is sponsors. So I know that's a segment which you're very familiar with. When I say sponsor, a sponsor is somebody who's doing his own real estate deals, or it could be a non-real estate deal, but let's stick to real estate for now because I know a lot of your audience is familiar with that.
Mhm.
It could be somebody who's identifying a multifamily unit and they typically have been syndicating it. And then it might be a value add, it might be a new construction, it could be a hotel, or it could be a student housing they're developing. So that's category number one. Category number two is what we call co-GPs. Uh, and Adam, the term co-GP is widely misused in the industry. Sometimes all
It
you're
is.
doing is raising capital, you know this, and they
Yeah.
call themselves a co-GP. We highly discourage that. When I talk about a co-GP, I mean truly a co-GP who are more junior sponsors, so to speak. They want to learn the ropes. They are not the primary sponsor, but they do have additional responsibilities, maybe asset management, in addition to just capital raising, not just capital raising. That's the key point.
Mhm.
So that's a great platform. Avestor is a great platform for them also because we introduce them to senior operators and then they learn the ropes. And it's a win-win synergistic situation because the senior sponsors now let them raise capital, teach them the ropes, and it's a win-win situation for both. The third segment is capital allocators. I know that's something you're interested in exploring, a segment you're interested in exploring. Who is a capital allocator? A capital allocator does not do his or her own deals. They are very good at finding deals. They're very good at analyzing deals. They're very good at investor relations. So let's say you are a super smart investor, which not we don't have to kind of be hypothetical about it. You are a super smart investor. So let's say your friends and family want to say, "Hey, Adam, I like the way you pick these syndication deals. Can I come along for the ride? Whatever you're picking, can I also get a slice of that?" Now, a capital allocator can use our platform to build a fund. And so he can send one check to the sponsor, and then all his friends and family or his investors who want to invest like he or she is investing can invest in that deal. So that's the third category. And the fourth category is debt originators. So these are people who are actually giving a loan to fix and flippers, maybe. So, or I mean, you're not talking about a 30-year mortgage here. This is somebody who's giving a loan for a couple of years or a year or 6 months. And so those are the four categories. To recap, there are sponsors who are the people doing the deals, co-GPs who are junior sponsors who are learning the ropes, capital allocators who are just investing in other people's deals, and debt originators who are originating loans to people who are maybe doing a fix and flip or they want a short-term loan. Yeah. So those are the four categories. So from a sponsor experience, so what we for any of these people, what we do is we don't provide just the portal or the backend system as you're talking about. That is just a small piece. So we are a complete solution. So you, for example, you cannot come to us and say that, hey, here is a set of documents, go ahead and just use it, because we support customizable funds. So we have our own set of template documents which let users, investors pick and choose which deal they want. And so we help you with develop this custom PPM. We introduce you to our partner set of attorneys who give highly discounted rates. We do your fund accounting for you. We give you marketing partners such as yourself who can work with them to scale the fund. And we also give you a mastermind where you can interact with other fund managers. Maybe you interact with other sponsors, or you can present your deal to 300 other capital allocators and fund managers who may want to raise money for your deal. So think of us as a holistic solution and not just a backend portal solution, as you mentioned. Again, a long-winded answer, but I wanted to go through all the different
No,
segments.
I'm
Yeah.
so glad that you're long-winded, but it isn't really long-winded. I know that you could talk a lot more about it, and I've got a lot of questions as well. It's absolutely fascinating what you're doing.
Thank you.
Tell you
Thank
what,
you.
let's step back. No, it's really impressive. Let's step back a little bit and find out a bit more about Badri. What is your background, and what is the story of Avestor? How did it come about?
That's thank you for the opportunity. I really appreciate that. So I was an exec in a Fortune 500 company, managed a team of several hundred people across multiple continents. You know the story. I mean, you get tired of plane travel. So I kind of retired from corporate life almost more than 15 years back.
Okay.
And here is a fun fact about myself. I mean,
Sure.
let's not all be serious here, right? My goal is to visit every country in the world. Yeah.
I saw
So
that actually on your LinkedIn profile. I was thinking every country. Oh, it's quite
I
original.
know I probably will not get there. It's a goal. There are some countries, even if you give me a ticket, I'm not going there.
Exactly.
I shall not name those countries, but we all know where they
That's
are.
right. Hopefully England isn't on that list anyway.
England is absolutely not on that list. I've been there multiple times. Lovely country.
All right.
And they're what can I say? They've made their presence felt around the world.
Exactly. All right. So,
So
what was this? How did you get to Avestor then? I mean, you come out to this Fortune 500
yeah,
environment. I
so
know
I was
exactly what that is.
retired, just traveling, and then my partner and
Ah.
co-founder Sanjay, he came up with the idea, and he wanted me to come out of retirement and help him build this company. And the reason, let me tell you what his genesis was. He was
Mm,
an exec in a Fortune 500 company too, and he found the process of investing in all these syndications very laborious. You have to go to these sites, do a lot of research, sign a separate 40, 50 page PPM. Sometimes the minimum is 50, 100, $150,000. And he wanted to build a diversified portfolio. So he wanted to build a system which replicates the stock brokerage experience. And we partnered with a third co-founder who is a tech genius, and they started building. I came along a little later, not too far along, when they had built the initial prototype. And so we launched our own fund, which brought the stock brokerage type of experience. I'm proud
mm,
to say we have invested in dozens and dozens of deals, maybe 50, 60 deals. All of them have done very well, except with a couple of exceptions, with returns from 50 to 150% over the lifetime of the deal.
mhm,
And so that's how we launched the company. So we created our own fund and our own platform to give investors the ability to pick and choose deals and build customized portfolios tailored towards their needs, their risk tolerance, their geographic preference, their time horizon, and so on. And then what happened was we pivoted a little bit because
mhm,
other fund managers came and said, what you guys have built is phenomenal. Why are you keeping it just to your fund? You can scale much faster if you offer it to other fund managers. So
mm,
the company, you can, in some sense, say truly started. Startups go through different pivots and business model changes.
mm.
So our current business model really started, you can say the company effectively started 3 years back, because that's when we first opened it to other fund managers. And we have more than 350 fund managers in a wide range of asset classes right now. And the feedback we are getting, frankly, Adam, is phenomenal. I mean, they think that what we have built will change the face of capital raising. So,
Well, fascinating. Let's talk about that actually. I had a different question, but let's talk about that. So, what is your vision for the company? Where is Avesta going?
our vision is to make capital raising as customizable as going to Starbucks and identifying that perfect latte, right? So we want to simplify it, from both the investor perspective and the sponsor perspective. So the investor should have the ability to invest in what they want, when they want, how they want, without having to sign multiple documents and go to hundreds of different places. And they should be able to do everything from within the platform, right? ACH, accreditation checks, anti-money laundering and know your customer checks,
Mhm.
signing a document, everything they should be able to do without having to go to multiple places. Similarly, for the sponsor, we want to provide a one-stop shop for all their services and not be just a tech platform, but be
Mm.
their back-end business partner for helping them market, launch, and scale your fund. So trillions of dollars are being raised in the alternative investment market. And we think
Mm.
we can make a huge dent in that market and provide a fantastic customer experience. And when you provide a fantastic customer experience, then the fund managers also have a great experience. So.
Yeah, it feels very different from any of the other backend platforms. When you kind of know.
It is. The backend portal is just a small piece of what we offer. Don't get me wrong. We have a fantastic tech team,
Mm.
more than a 30-person plus tech team, which
Mm.
and our CTO has built systems which scale to millions of users. So technology is a core strength. All three co-founders come from a technology background. We are not
Mm.
real estate people in the traditional sense of the word, except I've invested in real estate for decades, but I wouldn't
Mm.
call myself a real estate guy. So.
To what extent is is Avesta primarily real estate today, or is it primarily real estate? Is that?
I would say it started primarily real estate, but
Mm.
more than 30, 40% of the funds now are non-real estate. And it's fascinating to see all the different type of business models, right? I mean,
Mm.
some people, there were talks about doing a fund on judgment liens and music
Mm.
streaming rights and oil and gas and startups, of course. And then we have many, many funds which invest in for lack of better word, I'm going to call mini PE type of models where they buy different businesses. For example, two doctors, it's Adam, between you and me, I have no idea how they find the time, right? I mean, these doctors, they have the time to run these funds. I mean, hey, you're a practicing doctor. How do you get to do this?
Right.
But anyway, these two doctors, what they're doing is they know this medical practices inside and out.
Mm.
So they're buying the medical practices along with the real estate. I can tell you that's a great investment because the real estate tempers out any ups and downs in the medical practice. And so investors can come in and invest in a slice of a medical practice where they get a slice of the real estate and they get a slice of the business itself. And so we have a lot of companies, and then there is another company which is investing in juice franchises. So they want to expand the number of franchisees, and so they're buying multiple franchises, and it's juice shops. And so investors can come in and say, I like this particular location. I think a lot more traffic is going to come here and invest in a juice franchise. So those are the type of companies we are dealing with. So to answer your question, more than a third of our funds now are non-real estate, maybe more.
And are you, again, this is kind of getting into the weeds a little bit, but just to understand a little bit better.
Let's do it.
Are you primarily accredited investors, or do you cover all the different regulations?
That's a great question. So to step back, I know you're intimately familiar with this. There are three type of regulations you can raise money legally. There is Reg D, Reg CF, and Reg A. I won't get into too much detail, but it's safe to say that most of the money being raised is Reg D, and we support only Reg D at this time. We don't support Reg A and Reg CF. And within Reg D, and just to give your listeners, if they have been regular listeners of your podcast, they probably already know this. Reg D is an exemption you take with the SEC. So you do not have to file as an investment advisor. And so basically, we support only Reg D. Within Reg D, there are two types of funds. There is 506B and 506C funds. We support both. A 506B fund, just like maybe a 506B syndication deal, cannot be advertised, but you can take up to 35 non-accredited investors. I'm sure you know this, but again, for the benefit of your listeners, a 506C fund can be advertised, which is very important if you want to scale, but it is limited only to accredited investors. And it's not enough to just take the investor's word to say, hey, Adam, trust me, I'm accredited. You actually have to go through the process and check if they're accredited. And all that is integrated and part of our platform. So,
what have been the biggest challenges, Badri, that you've had in growing the company?
Fund number one, well, we created our own fund. I mean, when I say fund number one, fund number two, getting the very first fund was very challenging, but it's becoming more and more and more easier. We did go through, you're intimately familiar with this. We did go through a period of time when the interest rates were rising rapidly. So I wouldn't say it tapered off, but there was a depressed level of investments and alternative investments. But with the new administration, politics aside, I think it's a lot more investor friendly, and there is, I think, the appetite for alternative investments is taking off, and things are just exploding on our front. We are almost doubling or tripling our revenue every year. So
yeah, it's incredible, and I know you've told me some things in confidence, so I'm not going to put words into your mouth lest I say something I shouldn't. But yes, so aspirations then for 2025, where do you think Avestor's heading in 25?
So
let me just cut. Sorry, actually, so sure. You have so many different layers of support for your sponsors, particularly. So how is that going to expand? How are you developing that? Where do you see that going in 25?
In terms of support, we want to truly help them in every single aspect of what they need. Let me give you an example. We just introduced I think it's one of the best calculators available in the market on how you make money in the fund of funds. So we give you calculators, we give you templates, we give you spreadsheets where you can calculate how much money you make in a particular deal and how it flows through to the fund of funds. A customizable fund is effectively a fund of funds model where you're investing in multiple deals. We want to give them multi-channel support. Let them talk to our team in the channel of their choice. We have marketing-oriented sessions where we review their website and give them advice on, hey, here are some ways you can improve your channel. We help them find their ideal avatar. We help them with lead magnets. We help them obviously with the basic things like accounting and taxes. We give them a lot of educational content. I mean, there are different levels of fund managers in our group, right? There are some people who have never raised capital before, and there are some people who have raised hundreds of millions of dollars, not necessarily through our portal, but in prior raises and prior deals. So we want to truly be a one-stop shop. I know that term is kind of a little cliche and it's been overused, but truly that's what we want to be, a one-stop shop for everything they need to help market, launch, and scale their fund. So.
Yeah, and this is, and I might be wrong. By the way, so there's definitely some pinging going on. I think it's at my end. I apologize for that.
I
Everybody's checking
don't
their
think it's on
emails.
my, I hope it's not on my end, but yeah,
I
no,
think
no
it's
worries.
mine. I just set up a
It
new
doesn't
email
seem very
system.
intrusive. It's fine. Go ahead. No problem.
But so these additional layers of support that you offer to sponsors, these are all included in the package, aren't they? Somebody signs up and
Not all of them. A lot of them are. For
Mm.
example, we have partnerships with marketing agencies. Not everyone needs that partnership. They already have the marketing agency. These are all highly discounted rates. We have a package which includes 2 lead magnets, a branding guide, website development, avatar targeting the niche avatar. So all that is included for one flat price.
Okay.
Or we have other packages where you have to pay additional for Facebook advertisements, right? Obviously, we don't pick up the Facebook ad budget. But I would say what is included is all the core services, accounting, bookkeeping for the fund, the platform itself, educational courses, the mastermind, access to other fund managers, the ability to present to other fund managers, all that is included in the base price. But then things like marketing can have an unlimited budget, right? If you ask me what's your marketing budget, well, based on your marketing budget, it could be zero. I mean, that means that you're going after friends and family, which is fine. That's a perfectly legitimate thing to do. Or it could be $100,000 a month. So we do have partnerships, and we offer different packages for different levels of fund managers. So.
All right, so I'm going to ask you how somebody can learn more, but I cannot believe how quickly our time has gone. I would love to talk to you more
Time
about.
flies by when you have fun, and it's always a pleasure to talk to you.
And we spent plenty of time last time, so I'd just love to cover all of that stuff, but we are limited today. We'll come back and revisit. Let me ask you 3 sign-off questions, and then I'm going to ask you how somebody can learn more. All right, so Badri, you've got a really interesting background and career, not focused in real estate. You have a lot of experience in real estate. My audience is primarily real estate. So let me ask you that. What has been the hardest lesson you've learned in real estate?
Location, location, location. I mean, I know that sounds cliche. So the way I got involved in real estate is buying properties within a 15-minute driving distance from my house. Look, there is no one right answer for real estate. I mean, everybody has their own models. There is no one way to make money. And I deviated from that model and then bought other houses and other kinds of properties in other states. And I regret it. I should have just stuck to, hey, if you can't drive within 15, 20 minutes from my house, I'm not going to buy it. So, but real estate is just one segment of my portfolio. For example, I've invested in about 35 startups, and I do a lot of index trading options. So, real estate is only a small subset of my overall diversified portfolio, which is the way it should be for everyone, really.
So let's talk about your fund of fund managers, the allocators, the capital allocators, etc.
Sure.
So through their lens or in that context, what are the biggest challenges you think that they face in the real estate syndication world today, and how can those challenges be overcome?
So what are some of the things you need as a capital allocator? What is the very first thing you need? You need investors. What's the very second thing you need? You need deals, right? I mean, let's reduce it down to the basics. And a lot of capital allocators come in with the idea that, they take people at their face value. Hey, tell me when you have a deal, I'll invest with you. There is a big difference between a verbal, tell me when you have a deal versus giving you a check for $100,000.
Mm.
Part of it is being realistic about their expectations. And so we educate them, we teach them about that, we give them training on how to approach investors with confidence. And we also help them with deals because what we do, I didn't mention this earlier, we are almost like sometimes people take it as a negative, but I like Costco. So think of this as a Costco model where we go to different sponsors in all the top tier categories, multifamily, self-storage, and we negotiate on behalf of several hundred capital allocators to get preferred terms for our Avestor fund managers. So what I mean by that is, it's no secret in the industry. If you raise $3 million, you get better terms than if you raise $300,000. I'm not giving a big secret there. So what we do is even if 4 or 5 fund managers collectively raise $3 million, we get preferred terms. Sometimes it might be even a 90-10 split, and the capital allocators can take 10 or 20% and pass the rest to the investors. So we have for capital allocators who want to start a fund, we help them with literally all aspects of it, apart from the platform, the technology, the legal, and the compliance. We give them marketing packages where they can find deals. We give them education, and we also help them find deals. They don't have to go only through the deals which we provide. They can get their own deals as well. So,
Yeah, that's really fascinating. And that's what I was thinking of when I asked if, are you a marketplace?
we are not a marketplace today, but there are some things we are exploring. And we do have a fund marketplace in our website, but which we don't advertise very much. So if somebody comes to our website, they can see all the different types of funds which are being created. But let me assure you, the investors for each fund do not see the other funds. They see only the deals which their fund manager exposes, unless they come to our website independently.
Ah, interesting. Okay, last question, last rapid fire question anyway.
Sure.
So for a fund manager or a capital allocator or somebody who's thinking of getting into the business, right? You talked about this being an exploding industry. What advice do you give them?
Do not be everything to every people. Do not be everything to everyone. Sorry.
Mm,
Because that's the biggest mistake they make. Identify your niche target, your avatar. It could be women executives. It could be a dentist if you're a dentist. It could be someone from the medical professionals. First, identify who you want to go after initially. It's like the bowling pin analogy. And then be realistic on your expectations for when the fund will scale. If you've never raised money from before, it's not realistic to think that you'll hit $100 million fund within a few years. So those are the 2 pieces of advice I would give. Keeping in the spirit of rapid fire, I'll stop at that point.
thank you. All right. So how can somebody, what's the best way for somebody listening to this podcast, to this show? What's the best way for them to really get under the hood of Avestor and learn more?
Yeah, Adam, it's all about giving and being of mutual benefit to each other. So even if they're not interested in a customizable fund, I'm always happy to chat with them because we have seen hundreds of deals. We have learned,
Mm.
we have launched hundreds of funds. So the best way to reach me is LinkedIn. You can look me up in Badri Malynur, BADRIMALYNUR, or feel free to email me. My email address is badri@avestorinc.com. And I know you'd be kind enough to put that contact information in your podcast. It's that's BADRI at AVESTORINC.com. But I'm sure you'll put that in your
I
information.
most definitely will. Badri Malynur, co-founder and vice president of sales at Avestor. What an impressive shot. Thank you so much for joining me today.
Thank you, Adam. It's always a pleasure to be with you.
All right, that was Badri Malynur, who is vice president, co-founder of Avestor. Isn't that an interesting story? I do recommend that you go to the website avestor.com. I better check that actually. Avestorinc.com, avestorinc.com, and have a look around. It's really a unusual platform in a very good way in terms of how you can engage in the world of alternative investments. Badri, what an enormous pleasure. It's been such a pleasure getting to know you. Thank you so much for all your time, for showing me, in detail about the platform and for joining me today. I know that you are going to grow your company to be really industry leading, if it is not that already. I know you've got some big plans that what you kept under the covers today. We look forward to hearing about those more as the new year unfolds. And thank you too, dear listeners and viewers, for joining me today and for listening in to my conversation with Badri. I really appreciate your time. If you would like to learn more about this business, the business of commercial real estate investing, particularly in syndication, sign up to my newsletter, gowercrowd.com. Just hit the subscribe button there. You'll see some of the companies that other subscribers work for. It's quite an impressive list. So go there, gowercrowd.com, hit the subscribe button. And thank you for joining me in this first episode of my new season, focused entirely on the world of capital allocators and fund managers. It's been a real pleasure. Looking forward to some more very interesting episodes coming up. Don't miss any of them. But for this episode, that's all I've got. And so until next time, this is Adam Gower signing off.